Hey guys, it's JP. Since the start of my company FundWithCredit.com, we've secured around 20.7 million in 0% business credit, and we did that entirely no doc, meaning we didn't provide a bank statement, a tax return, anything like that. So what I want to do today in this video is share with you, when I'm analyzing a client, considering them taking them on at FundWithCredit.com, there are three specific things that I will look for. And if these three things are true, there is a 90 to 95% likelihood we are going to get them above 100K in 0% business credit super quickly. So what I want to share with you today is all three of those. And the first one, which is the most important, is do they have an optimized credit report? And specifically, do they have enough comparable debt, or as some people call it, comparable credit? So what do I mean by that? And what is comparable credit? So comparable credit is basically just referring to, have you had similar debt on the personal side, even slightly comparable to what you're requesting on the business side? So for instance, whenever a lender is checking your personal credit report to see if everything is lining up there and if they can extend you that credit line, basically what they're doing is they're taking a look at your credit report to see hey, has he paid his bills on time? Do they have a good credit score? And what they're also looking for, though, is to see, have you had comparable credit lines compared to the one that you're asking for? Because let's say you go to a bank and you request a 30K 0% business credit card. Well, if they go and look at your credit report and you've only ever had one personal credit card and has a $1,000 limit, you probably don't have enough comparable credit to justify that 30K credit line. And that's kind of what I mean by comparable credit or comparable debt. Have you had enough debt on the personal side to justify those high 0% approvals on the business side? Because when you are going for business credit, no doc, the only thing they have to look at and compare, basically see if you're qualified, is your credit report. And if you may have a high personal credit score, so your credit score could be as high as 800, but if you've only ever had one credit card and the credit limit on that card is $1,000, there's not a good chance that the bank is going to trust you with a 30K credit line, because you haven't really shown them you can handle that type of money yet. So I'm actually going to give you two realistic examples here, and these are, one was a client of mine, the other one was just someone I had talked to and lightly consulted, but it just kind of sends this point home. Essentially, there was this one person that I consulted with lightly. Once again, they were not a client of FundWithCredit.com, but they had an 815 score. So from the outside looking in, when they first told me that, I was like, well, if you have an 815, we're probably going to be able to rock this for you. But whenever I went a layer deeper and I started actually taking a look at their credit report, well, I came to find out that yes, they did have an 815 credit score, but they had no auto loans. They didn't have student loans. They didn't have a mortgage, and they had one singular personal credit card and had a $1,000 limit. Now, they've had that credit card for a while, so they had credit age, but the problem is their credit profile was incredibly thin and they had no comparable credit. So yes, they had an 815, but it was from one single personal credit card. And when they went to go get funding, they tried to go get funding on their own. Well, they didn't get much. They got 20K. It was between 20 and 30K. And it's just simply because the score at that point doesn't really matter that much, because it's I think of it as light and heavy scores. They had what I would consider a light 815, meaning they had an 815 credit score, but it didn't have a lot of juice behind it. There wasn't a lot of credit lines and loans supporting that 815. So it was just a very light 815. Now, on the flip side, I had a client not too long ago who had a 750 or 760. They were around that range, so significantly lower than this other person. The difference is they had a mortgage, they had an auto loan, they had some student loans that they had paid off, and they had 6 personal credit cards, with the average limit on each of those cards being around 5,000 to 7,000. So they had a way lower score. Well, not way lower, but still a lower score. But the difference is their score was supported by all this different comparable debt. So whenever the lender would take a look at their credit report, they saw all these different forms of debt that they had on the personal side that they had been paying on time over the months, over the years, and they trusted them with more money. Specifically, this client within 6 months got over $300,000 in 0% business credit. So a huge result. which is honestly kind of backwards to what I was taught even growing up, which was like, pay everything off, credit's bad. But I'm not saying everyone should go into credit card debt. That's not what I'm saying at all, or people should over leverage themselves. But if you are trying to ask the bank for a lot of debt on the business side and you're not going to provide documents, so no bank statements, no tax returns, you do have to have some debt on the personal side to show that you can be trusted with the debt on the business side. One thing though I want to be clear on here is comparable debt is the most important, but you don't want to go, if you have one personal credit card right now, maybe even two personal credit cards, you do not want to go just get a bunch of debt at one time. So let's say you have 1 to 2 personal credit cards right now. You don't want to go get an auto loan. You don't want to go get a personal loan, get a mortgage, 4 more personal credit cards, over the next 60 days. If you do that, then you're going to have way too much new credit, and you're actually going to have to end up waiting a year or more before you'd be in a position to get business funding. So it's not something that you can just go hurry up and apply for a bunch of stuff, and then the banks are going to be like, oh, look at all this comparable credit. Well, now you have a bunch of new accounts, and it looks like you're in need of money, and that's a whole different problem. The goal is, if you have a thin credit profile right now, is you need to just get a new account once every 90 days. Then as you get that new account, spend on it, show that you can handle the debt just fine. And then look at about a 6 to 12 month time horizon before you go apply for the business credit. You're going to want to apply for it sooner. I get it, because no one wants to wait 6 to 12 months for something. But the problem is, if you go too quick, you end up getting far less credit, and it's just not that beneficial. So to give you a good example of this, my brother, about 2 years ago, when he was interested in getting some business capital because he wanted to start his first business, he only had one credit card, and it had a $1,000 limit on it. And I remember when I took a look at that, I was like, you're not in a position right now to go after capital. It's like, I'm sorry, you're going to need to take this slow. And so what I had him do was I had him get a loan. He needed a car anyway, so he got an auto loan. And then every 90 days, I had him get a new personal credit card. And then we let those age for 12 months. So it was like April, I believe, of 2023. We let those age. He got one new one every 90 days. And then at the 12-month mark, we finally were in a position, and I was like, all right, we'll go after stuff right now. Like, we'll attack. And he was able to get over 100K in 0% business credit within like 5 days. It was super, super quick. But if we would have tried to apply for stuff at month 6, he maybe would have gotten 50K total, not 100K within the first 5 days. So it is important to make sure that you give those credit lines enough time. You don't apply for a bunch of them at once. But that's the number one thing that I'm looking for whenever someone applies and I'm analyzing if we're going to bring them on as a client, is I want to see, have they had comparable debt? Because if they don't, they only have one credit card. I mean, they may have a 790 score, which seems like a super high score, but I'm not going to take them on as a client because I can't guarantee them that I'm going to get them that result. We're going to get them 100K quickly. And so normally in that case, I would just tell them exactly what they needed to do to optimize. And then down the road, they will 100% be in a position to get it, but they're just not in a position. And so, I mean, just to show you how important that is, someone could have dang near an 800 credit score, but I still won't take them on unless they have comparable debt and everything is structured there properly. And one thing I want to crack open real quick to touch on, because there's a lot of smoke out there right now on the internet. There's a bunch of funding companies because I see these ads all the time. I get on Instagram, I get on Facebook. I see those ads from people saying that, hey, if you have a 680 plus credit score, you can get 100 to 250K in 0% business credit. Now, I'm just going to tell you right now, do not waste your time. If you have a 680 to 700, I personally have never gotten someone a ton of funding if they had a 680. And I promise you, I've never heard any other stories. I talked to a bunch of different funding companies. I promise you, I've never heard a story from someone saying they absolutely smashed a funding round with someone who had a 680 or even sometimes a flat 700 credit score. From my experience, if someone has anything less than a 740, they're just not going to get 100K in capital quickly. That's why the cap to work with FundWithCredit.com, I have my credit score cap at 740, because From my experience and what I found, if someone is below a 740, there is something wrong on the credit report that is keeping it below. Because if someone has multiple forms of debt, they have multiple credit cards, and they are paying that on time, their credit card balances are below 20 to 30%, they're not going to be at a 700 credit score. They're going to be at like 780, 800, something high. They're going to be north of 740 if they have clean credit. If you're below 740, that's an indicator that something needs to be fixed on your credit first. Whether that be just high balances on your personal credit cards, it could be a late payment, it could be a collections from years ago. All I know is that if you're below a 740, there is some indicator on your credit that needs to be fixed before you can apply. I personally do not run a single person through an application unless they're above a 740, because I've kind of found that as that like number that if you're above that, you're in a really, really good position. So I'm not going to continue on that point. You get what I'm saying. You need to have above a 740 score. You need to have comparable credit, but that is the number one thing that I look for whenever I am analyzing a client to see if we want to bring them into FundWithCredit.com. Number two is you need to make sure that your business and personal information is synchronized across everything. So what do I mean by that? Well, I can't tell you how many times that I will see someone come in, and because a big problem not too long ago was people were getting denied for, I was seeing this across the industry. People were getting denied because they couldn't verify information. And essentially what this comes down to is whenever you apply and they look at your personal credit, they are also looking at the business and making sure all the information is synchronized there. So if they go to the Secretary of State and they look up your business's address and it has an address in Utah, and then they go to your Dun and Bradstreet for your company, and they see that it has an address in California, and then let's say that they check your bank accounts that you have, and then, or like say like it's with Chase and they're checking the bank account to see what address you have there, and you have a completely separate address and it's like an Arizona address. If there's mixed information across all of these pieces, like the Dun & Bradstreet, Secretary of State, bank accounts, if it's not all synchronized, then they don't really know exactly where your company operates out of. And that makes banks a little hesitant to lend, because now if they need to send you a statement or they need to send you a letter, they don't really know if they're sending it to the correct place because you have a different address everywhere. And a lot of times they'll deny you, but they won't exactly tell you why. And what I found out was whenever your information isn't synchronized across everything, that tends to cause denials. And they'll give some random reason for the denial, but that's largely the reason for it, because the information is just different. So you need to make sure across every place your business might be displayed and the banks will be looking. So Secretary of State, Dun & Bradstreet, your EIN, on your bank accounts, just make sure you have the same address and all the information is the same principal, like you have the same owner's name, you have the same industry, everything is just synchronized across all that. That's very, very important. But the same way with the personal side, if you say on your application that you are, working for X company, but then whenever they go and check your credit report, on your credit report, it says you actually work for Y company, that honestly could trigger a denial, because it's like, well, you said you work here, but your credit report says you work here. And like, you just want to make sure that all the data is synchronized. The same way with when you're looking at your credit report, what address do you have listed at the top? This is a huge one. Whenever you look at Experian, Equifax, and TransUnion, what address do you have listed there? Because if your number, let's say that on your application, you say you live at a place in Utah, but whenever they look at your credit report, there's not even a Utah address on there. Even though like you could have just moved there, it's important to call the credit bureaus and update that before you apply, because if you put a different address and then they look at your credit report and there's California address listed at the top as your main address, that can sometimes trigger a denial, because once again, if they try to contact you or send you a letter or anything, there's mismatching information, and you don't want anything to look like you want it to look synchronized because it's clean, and they just prefer it that way. That's the only way I know how to put it. I've seen a lot of wacky denials come through, and after diagnosing a lot of weird denials, that's what I figured out it was. All your information needs to be synchronized. Just so when you go to apply, it's just nice and clean. Now, a lot of times I see people struggle with, they have a virtual address or something for their business because they don't actually have an office. In this case, I would just make your address your home, like your business address your home. And then after you're done applying for business credit, if you want to make the business address something else, you can. But you want to make sure that, just like I said, the information is nice, clean, and synchronized across everything. Again, I'm not going to beat that point. You get what I'm saying. Number 3 is age of entity, and the structure really matters. So what do I mean by that? I see a lot of times nowadays people are just spinning off companies for the sake of funding, and like that does work. The problem is I'm seeing right now results are not phenomenal if you have a brand new LLC. If you have to set up a new LLC, that's fine. But age of entity really does matter because it looks like time in business. If you're just spinning up a random LLC and then expecting it to, get a ton of funding, it's just, if you have a super, super, super optimized personal credit report, it works. Otherwise, it makes sense to let it age a little bit. I know a big thing was people would like to spin off a company within 1 to 2 weeks of that company being opened. They would go apply for funding, and that was working for some people. But I'm not seeing that work as well nowadays. It's nice. You should give a company at least a few months, at the very least, before trying to apply for funding. Again, I'm coming from it I don't like the idea of getting less than 100K and 0% business credit. Like whenever a client works with FundWithCredit.com, our goal is to have them above 100K in business credit within 30 days. So with that being said, everything I'm sharing with you today is if that's your goal too. If you want above 100K within 30 days, this is kind of the criteria that needs to be met for that to happen. And again, this is just from my experience. I'm not saying this is gospel. I know everything. It's just I've worked with over 100 companies. I've secured 20.7 million, 0% business credit. This is just what I'm seeing. But company structure, when I say company structure, this is what I mean. I'm seeing this as also being very common nowadays, that people will, just because we're in the internet age, they will set up an LLC in Delaware. They will rent a mailbox in Delaware and they call it their business address, and then they try to go through funding with that. Now, have I seen that work? Yes. The problem is it is spotty, and you kind of can't guarantee anything with that method. The reason being, banks are getting smarter and they're understanding the strategy. People will set up an LLC in Wyoming, they'll set up an LLC in Delaware, they'll rent a mailbox, and then they call it their business address. But banks are getting smarter. They have more comprehensive software, and they're not liking this that much because it looks like that company could disappear tomorrow. Like take a dental clinic, for instance. If someone has a dental practice, if they look up that dental practice, it's like, okay, well, like there's their Google listing. Here's where it's located on Google Maps. Oh, here's pictures of the building. Yep, that's the company name. Like it just looks like a very secure business that's probably going to be there for a while. If someone has this shoots up a Delaware LLC and they rent a mailbox, well, the bank can see that. They can see that that is a mass-produced address. A lot of other people are using that exact spot. It's not an actual office. It's literally just a mailbox, and they view it as that company could disappear tomorrow. So they're going to be a little weird about lending, 50, 100K to a company that looks like it could disappear tomorrow, and then they never get paid back. So banks are really looking for security from obviously the number one personal credit report, but from the company too. They want to see that it's an actual business that they can grow with. They don't want some company that was shot up 2 weeks ago, is in Delaware. And I'm not saying there's anything wrong with Delaware LLCs. I'm not saying that at all. It's just if I was going to do it myself, I would set up sure, the Delaware LLC, but then I would form file it into my state if I did not live in Delaware, and I would make the address my personal address. I just find it easiest that if you're going to go through funding, you don't have an actual business address. Just do your home for the sake of the application, because it looks like an actual, for sure, physical address. Banks understand a lot of people work from home nowadays, so they're not too concerned about that. What they are concerned about is it just being a mailbox. And once again, a bank is lending a bunch of money at 0%, but they 100% want to get paid back. So that's kind of like, I call it just, you got to dodge the risk algorithm. Whenever they're submitting an application, everything is run through the risk algorithm, and if anything triggers, it's not going to be good. So with structure of company, I kind of already touched on this, but you need to make sure that your industry and your address is synchronized across all forms that the banks might be looking at. And if you do all of that, so just to recap, you have strong comparable credit, you got a credit score above 740, I already forgot my own points. You make sure your info is consistent on the business and the personal side, and then you make sure that your LLC has a tiny bit of age, and you make sure that your structure of the LLC is proper. You're going to be 95% of the way there to getting 100K plus and 0% business credit in 30 days. That's just what I have found with all of the data and all the companies that we have funded, because I can't make a offer to someone unless I know all this info. So I have spent a lot of time really focusing on what actually makes an account very fundable. So that's if those things are true, you'll be in a very good spot. Obviously, there is more to this equation. It's like, what do you put for revenue on the applications? Where do you set up bank accounts? How do you put money in the account? There is other things that make this process work, but I don't want this video to be a million years long. So I'm just going to leave you with this today. I'm going to be coming out with more videos soon, and I hope you guys enjoyed it. JP out.